An expert, Marcus Levin, co-founder of the geospatial data firm XYO, recently said, 2022 poked holes in the crypto ecosystem and revealed imperfection our industry has yet to work through. For another bull run to capture us by storm, there needs to be a restored sense of authenticity, security, and sustainability in addition to a favorable macro environment. He believes the industry has a lot to prove after last year, and after the dust settles and people begin to trust the sector again, it will still come down to fundamentals. So, are we going back to the juicy moments of 2021 anytime soon? 2021 was a boom year for the crypto market. So much good stuff happened. Notably, it was the year that crypto, blockchain, and Web3 took center stage. Even Facebook rebranded as Meta, banks moved into the space, and NFTs were on the tip of everyone's tongues. The memories of those moments still linger in our hearts. The 2021 crypto bull could be attributed to many things. Institutional adoption and acceptance of cryptocurrency by major brands gave the sector a new source of legitimacy, and low interest rates during COVID-19 pandemic led to inflation fears, which made investors turn to alternative investments like cryptocurrencies. During the pandemic and subsequent lockdowns, most people spent most of their time online. That once-in-a-generation event stirred the hearts of many towards crypto, and thus the digital asset industry gained momentum. Well, our tongues are tied now. Since the rolling disaster in 2022, the industry has been looking around for the next source of growth. Some experts have stepped up to discuss what might drive the next sustained market upswing. One of the points that was highlighted is the fact that Bitcoin halving occurs every 4 years, when the number of new Bitcoin miners can mine is cut in half. This limits the total supply to 21 million, and the event is programmed into the Bitcoin protocol and is designed to limit the total supply to that number. The next halving will happen around April of 2024. An expert noted, it is the anticipation of Bitcoin halving by investors in the second half of 2023 that can become the main positive stimulus for the market, which should provoke a change in the global trend to an upward one. After halving, the price of Bitcoin always increases and other cryptocurrencies follow it. As we anticipate the revival of those moments, it is worth noting that Bitcoin is getting ready, even though certain circumstances are stifling the life out of it. However, Grayscale has secured a second landmark win for the crypto industry against the Securities and Exchange Commission, following Ripple's favorable ruling last month, according to broker Bernstein in a research report. A federal court ruled that the SEC must review its rejection of Grayscale's attempt to convert the Grayscale Bitcoin Trust into an exchange-traded fund. According to some analysis, the ruling likely clears the path for a spot Bitcoin ETF, and increases the chance that the SEC might approve all the current applications together. ETFs are traded on an exchange, much like equities, and track the performance of an underlying asset. Their popularity has been mounting because they allow market participants to invest in crypto without having to purchase the underlying digital asset themselves. The report stated that the court's decision does not allow for the GBTC product to be converted into an ETF immediately, but gives a fair basis for Grayscale to be treated in line with other Bitcoin ETF applicants. Plus, likely dates for approval start soon for the first review, and continue into early 2024 for the final SEC review. Bernstein previously said that it expects a spot Bitcoin ETF market to be sizable, reaching 10% of Bitcoin's market cap in 2 to 3 years. The landmark win that Grayscale Investments scored likely clears the path for spot Bitcoin exchange-traded funds, as the SEC will have no choice but to approve multiple applications. Also, JP Morgan analysts believe Grayscale's recent court win increases the likelihood of a spot Bitcoin ETF being approved. It was noted that the most important element of the Grayscale versus SEC court ruling was that the denial by the SEC was arbitrary and capricious because the commission failed to explain its different treatment of similar products, i.e. future-based Bitcoin ETFs. The Grayscale decision further suggests that the regulatory agency would have to essentially revoke its previous approval of future-based Bitcoin ETFs to defend its denial of Grayscale bid of converting its flagship Bitcoin trust into an ETF. However, such a move would be very disruptive and embarrassing for the SEC and appears unlikely. Well, JP Morgan analysts believe that it looks more likely that the SEC would be forced to approve the spot Bitcoin ETF applications that are still in play from numerous high-profile financial institutions, including that from Grayscale and BlackRock. As expected, the SEC recently delayed its decision on all 7 pending applicants by 45 days. Then analysts forecasted that the agency will likely not decide on any ETF filing until early next year when the final deadlines approach. While Grayscale's victory may bring us closer to the eventual listing of spot Bitcoin ETFs for US customers, JP Morgan is convinced that such an approval is unlikely to prove a game changer for the crypto market. Perhaps it's not the strategy we need to go back to the gains of 2021. Furthermore, venture capitalist, investor, and Bitcoin advocate Anthony Pompliano has talked to CNBC Squawk Box host Joe Crennan about Bitcoin and shared his take on what is likely to happen to the recent Bitcoin ETF filings after the SEC made a complaint about them being inadequate. Pomp seems optimistic, also acknowledges that eventually the SEC will approve a Bitcoin spot exchange traded fund. He said, Bitcoin is up 85% to start the year, hash rate is hitting all-time highs, and the network is executing exactly as designed. Ignore the headlines, do the work to understand what is happening. The host started the conversation by asking for Pomp's take on why the SEC called BlackRock's filing and several others that followed it inadequate, and also asked what exactly is inadequate about it, assuming that the SEC probably does not like Bitcoin. On the other hand, the SEC is currently suing the Binance and Coinbase exchanges for violating the US securities laws and, on the other hand, is turning down filings for a Bitcoin spot ETF. Seems like too much to handle. Anthony Pompliano believes that the regulator just wants more clarity about the filings, and stuff like who's going to be custodians, who are the surveillance sharing agreements made with, and so on and so forth, also needs to be addressed. According to Pomp, the SEC just wants complete information on this to understand it. Furthermore, Pompliano pointed out that the CBOE has already refiled, mentioning that the surveillance sharing agreement will be made with Coinbase, and other entities who submitted filings, including BlackRock, are likely to follow suit. He believes that the spot Bitcoin ETF will eventually be approved, at least for BlackRock, since it is one of the largest and most reputable players in the financial markets. Pomp believes that all rush to apply for a Bitcoin spot ETF is screaming that Wall Street wants access to Bitcoin, and as soon as the ETF is approved, institutions will start pouring money into it, as happened with when Bitcoin Futures ETF was approved. There is a good point here. Remember that institutional adoption was one of the things that triggered the 2021 bull run, and it seems like we are currently on the right path. Pompliano also said that so far 2023 has been good for the stock market. In particular, the Nasdaq Composite Index grew 32.7% since the start of the year. According to him, this is the fastest growth within the first half of the year since 1983, but Bitcoin grew 85%, triple what the Nasdaq did. The investor stated that Bitcoin's fundamentals keep growing, and with the hash rate surging to new all-time highs, and so has Bitcoin adoption, and these booms may all be leading to the price growth that is expected after the Bitcoin halving event. Well, we have another big update here, and it seems like the SEC chair, Gary Gensler, might get fired soon. Recently, Senator Warren Davidson renewed his calls for Gensler to resign. The SEC has been amassing records of failures for some months now, and an even bigger blow was the SEC's loss to Ripple. The preliminary court decision challenged the SEC's broad assertion that most cryptocurrencies are securities. A court ruled that XRP was not a security when sold to investors on an exchange, a huge win for the industry. While the court drama isn't necessarily over, a final defeat in the Ripple suit could prove devastating for the SEC. Plus, each adverse ruling exposes flaws in the SEC's legal theories and enforcement strategies under Gensler. Of course, Gensler has tried to portray the SEC's stances as natural extensions of existing law, but the disparities are quite intense. However, Gary Gensler's removal as SEC chair might just be a rumor. Nonetheless, the main emphasis is for crypto markets to recover the gains it has lost. But that's going to do for today's video. Make sure you hit the subscribe notification buttons, and we'll see you in the next video.